Well, joining us now is Tim Evans from Longleaf Trading Group. He joins us live from the CME in Chicago. Tim, hello to you. Great to have you with us today. Certainly, we have seen somewhat of a reversal in oil's fortunes. Some good news coming out of this latest meeting.
Yeah, some good news for a change. Definitely pleasant news for all oil bulls out there. Allowed us to actually shake out a positive gain on today's session. I thought the outcome of the meeting or the announcements made from the meeting were very helpful. We've been looking at Longleaf. We've been looking at the numbers relating to compliance, and they were changing. In the early part of the agreement back in November of 16, the compliance rates were very high, and I think that caught most people by surprise. But over the last few months, we've seen those compliance rates being less compliant, and obviously members subject to this deal, primarily Russia and Saudi Arabia, definitely had to come in and make sure all parties that are member to this agreement understood that that's not going to be tolerated. And I think that was the main takeaway from this meeting that concluded today.
But that said, of course, we also saw no additional cuts announced at this meeting. Do you think we have perhaps exhausted appetite when it comes to cuts from the OPEC members?
Yes and no. I do personally think yes, but I think in terms of the way this is all going to play out, I think members of OPEC and that are, again, other members that are subject to this deal, I think they genuinely have a different take than I personally do on the way this is ultimately going to play out in the long run. There's a lot of signs I think one could look at to be encouraged that the market could, as we approach the end of 2017 and move farther into Q1 of 18, that the market could tighten up a bit. I think with the action by Saudi Arabia by lowering their exports down to 9.6, lowering it 300,000 barrels, while consumption is high in the kingdom over the summer months, I think that it definitely will be helpful. Having Nigeria commit to lowering its or capping its production past that 1.8 million barrels a day, which they've verbally committed to, at least as of this meeting, I think will be helpful. But I think even if we look at the U.S., which has been the main problem, for global market balancing, I think we're seeing signs on that side that, could allow the market to, find balance sooner than I think a lot of analysts have been talking about over the last quarter or so.
So from an investment perspective, Tim, in terms of some of the stocks and the players within this space that you look to, who are your picks right now?
I've got one pick, and that's my top pick, and that's Halliburton. Because Halliburton is an oil servicing company, and if you kind of look at the market, especially in the United States, what we're seeing really is that, as U.S. producers are trying to drill, there isn't enough workers or equipment to service the wells that have been drilled. If you look at the number of basically unoperable wells, that number has increased by 2,000 since December of last year. So while we're making headway in the U.S. in terms of drilling those wells, again, there's not enough infrastructure to support the wells themselves. So Halliburton is positioned to do extremely well as, the market effectively is operating at full capacity through the end of 2017. And, obviously that's a lot of new contracts to be written as we move into 2018. So I think Halliburton's a good play.
Tim Evans, we are out of time, but Halliburton's, we were watching that today as one of the big movers on that session in the US. Great to get your insights today. Thank you.
Thank you, Natalie.
And